Brandon wanted to see GMAB. Let's take a look at GMAB. So Genmab is a biotechnology company, develops antibody-based products and product candidates for the treatment of cancer and other diseases in Denmark. The company markets Epkinly and Tepkinly, for adult patients with relapsed or refractory diffuse large B-cell lymphoma. So these guys are helping people that have particular types of cancers. Okay. They're a pretty big outfit, 2,682 employees. What's the stock been doing this year? It's doing really well. 1 year looks terrific. The 5 year, not terrific. So it looks like it's begun to get some momentum. Be interesting to see what their fundamentals look like. $20 billion market cap. So it's pretty good size market cap. And we're talking US dollars. All right. Revenue, 3.65 billion. And they're profitable. Low PE ratio of 14.69. Forward P of 20. Strong buy with a 25% discount. Growth looks excellent. And this is a pretty chunky number. 3.6 billion is a pretty good size number, growing 32%. One thing that I like about stock analysis is it brings together the forecast of analysts, and I'm really going to focus in on that because it's great that they're growing at 33%, trailing 12 months. But what is really important is how are they going to grow over the next couple of years? If they're going to continue that growth, this is a pretty good looking stock. If they're going to stop growing, not so much. So let's look at their profitability and free cash flow. Free cash flow looks really good, 1 billion. And oh man, margins, 94.5. Okay, looks good. So their revenue is going up. So doctors, the health community is discovering this drug, and they're finding that it probably helps people with cancers that they're targeting. And this treatment's becoming more and more popular. It's very profitable. So they're probably outsourcing their production and, just producing what's being sold to hospitals and patients and so forth. Profitability is really good. Free cash flow looks really, really good. Fundamentals look terrific. Top line growth looks good. Fundamentals look fantastic. Free cash flow looks terrific. Okay. So how are they going to sustain this growth? We've got 6 analysts weighing in. One analyst is, hey, this stock can continue to go higher. Another analyst is, well, I'm a little concerned. It's a little expensive, but overall, on average, 25% discount. So they're going to keep growing. This growth looks good. Okay. It's not like, breaking records. It's not 80% growth, but it's good growth. Okay. So, and the profitability is going to expand down to the bottom line, the net income line. Forward PE, is this right? 1.96. That's so low. It's unbelievable. What was their PE ratio on the main page? Yeah, the current PE ratio is 1.5, forward PE of 20.9. So their net income 137. Stock price is 32. This PE ratio is incorrect. You have net income of $1.37. I'm sorry. Let me see here. So shares outstanding. I'm going to calculate the earnings per share. So yeah, the earnings per share is $21.62. It's really hard to believe. So let me go to their actual income statement, and then we'll go from there.
Yeah, Seeking Alpha has a forward PE of 19.53 for them.
Yeah, you want to, I think Stock Analysis does a really good job, but they're consolidating data through some coding and some lookups, and sometimes the data's not right. So I'm trying not to say something bad about them, but we got to confirm numbers, because if I'm going to invest my hard-earned money, I want to make sure I see the right numbers. So interim report. So they are making a lot of money. 17 for the full year of 2024, they made $17.74 per share. So they are making a lot of money, and their share price is like $22. So the gross margins were 94.5. So shares outstanding, and I'm going to note this. I'm going to use this for my update on my valuation, because this has all the metrics that I really can confirm. This is the company reporting them, so we're good. All right, so coming back to the stock price is up a little bit year to date, and it's really flourishing. Okay, so let's take a peek at debt. Just make sure that's not a big problem. Nope, almost $3 billion in cash, only $148 million in debt. Can you take a look at the charts, and I'll update a valuation on this company?
So
man, look at that.
Yeah, I've drawn a couple downtrend lines. So they really struggled after hitting their peak in 2022. So that's this top trend line, and would be a much more conservative entry point. And then I drew one from the July 2023 high across to the February and March high. And you can see that it did break out in June. It did retrace. So these trend lines aren't perfect, but it does give you a pretty good indication. So it did pull back, and once it broke through it the second time, then it was off to the races. And when it finally broke above this one, which would have been a really safe entry point. This one would have been a little bit more risky. But I mean, from here, let's see where it is. They're up 60% from that trend line and 25% from that one. So neither one of those would have been terrible entry points. Notice also that it is trading above its 21-day exponential moving average, and it's holding that. Another good entry point on a run like this would be if it comes down and touches that 21-day EMA. As long as it can hold that 21-day EMA, then you're in pretty good shape to continue holding this stock. If it breaks that, you need to consider doing some trimming on it, because when it does fall, it can fall about just as rapidly. So in 1 week, it fell 21%. Here it fell 24% in right at a month. So they are in overbought territory. Let me come out to a year. They are in overbought territory, but you can see they can stay that way for quite a long time. That can either get resolved by the price just trading sideways for a while or an actual pullback, but it is holding that 21-day moving average really well. The PPO has been positive, I would say, from the 9th of July. It did come back down and try to go negative, but it's been totally positive since the 12th of August. And take a look at the accumulation. That's very impressive. So even though the price was going up all the way from August through about the 3rd week or early the 4th week of September, the accumulation didn't really change all that much. But then this month, it is really shooting up, and we're at a 52-week high. Let me go back to the 3 years. This is a 3-year high for accumulation. So, oh yeah, one other thing I wanted to point out that I saw on this one is look at the shift in volume beginning right here. So this blue line here is a 50-day moving average of the volume, and you can see a definite step up from the end of September of 2024, and it is starting to increase again, the 50-day moving average on the volume. Let me get rid of that and go back to 1 year and look at the volume here on this run. That is that's very impressive. I think Dr. Brandon's got one live here.
Yeah, and I mean, I'm double checking their fundamentals because they look too good.
Yeah, he's
right.
he's got one. He's got one we should be watching for sure.
All right, so I'm gonna get this screen back. So let me take you through this valuation that I just pulled out of the oven, so to speak. All right, so we've got, this is the company. Now they have good growth, good profit. So it's a less of a risk than the stock we just looked at that had a 10% discount. And keep in mind, as we see interest rates go down, the discount rate will also go down on my valuations. But for now, it's going to be a 9. The higher you go, the more conservative you are acting. The trailing 12 months of cash flow was $1,091,000,000, and I'm going to grow the first year by 20%, and then years 2, 3, 4 by 15, and then long-term growth by 4%. That creates a net present value of all those cash flows of $32 billion. They have mostly cash on the balance sheet with very little debt. The shares outstanding are 616 million. It provides a 42% discount based on the value of the cash flows for Genmab. The earnings per share was where I had to triple check numbers because I'm like, am I seeing this? Am I seeing the wrong currency? What am I doing wrong? $19 per share, and the stock price is to $32 per share. So that's not, you don't see that every day. You see that every once in a while. And I took a PE at 12, but really based on their growth rate, I would have naturally went 18 to 25. Their growth rate is going to be higher than 15. It's actually going to mean 25% growth on earnings per share. So it's highly discounted by 88% on earnings per share valuation. So this is a highly discounted stock. And I'm going to follow this stock. and see if I want to buy into it. Let me look at what analysts were saying again on this stock, because so these guys are saying it's 25% discounted. There is somebody who's quite high in it, but they're not as high as what these numbers are showing me. So what's wrong with this picture? I mean,
how many people are? Oh, it's a pretty high number of analysts.
Yeah. And it's not like a tiny cap. It's not like, oh, there are 500 million. No, it's 20 billion. This is like, okay, this is getting a little bit serious on the market cap here. So this one here is a good one. I'm going to be following this.
Yeah, I am too. The chart looks good, and
I'm going to drink another cup of coffee and go through the numbers again.
Yeah.
Yeah, good one. And, I wouldn't be surprised. They're carrying so much cash on that balance sheet. I own two businesses that are similar to this, and some of the behavior that I really like. First one is United Therapeutics. They continue to invest in like the next drug they want to discover and add, overall, that's a good thing for mankind that United Therapeutics is discovering the next drug. And they just had very positive results from one of their trials. So the stock shot up like 30 or 40% in one day. So United Therapeutics is taking their cash and doing good things with it. The other company is Catalyst Pharma, and they acquired other smaller companies and made their company bigger. And those drugs are now commercialized and is growing Catalyst Pharma. Genmab, with their cash position and their very high profitability, should do the same. Like, hey, go grab some other businesses, acquire them. Or you guys are smart enough to create this drug, go create some other drugs. Go create other treatments to other diseases that people are dealing with, and use your cash flow for those purposes. Either option, this is really exciting, and it's a really exciting company. So thanks for bringing it up, Brandon. Good one. That is Genmab. We'll see how this one trades going forward.